Hey, you have Patrick Findaro here, co-founder at Vetted Biz. Very excited to have on Phillip Nappi from VaVia. They're an emerging franchise concept in the waste removal space. They've been growing at a steady pace. Just founded a couple years ago, back in 2019. They have 16 locations that are up and operating or in different stages of development. Today, we're going to go through why you might want to enter in the waste removal industry and talk a bit about the profit margins, Philip's road path in the waste removal industry, as well as how he got into franchising and why franchising was a good path to expand VaVia beyond just corporately owned and managed locations. Philip, thanks a lot for joining today.
Oh, Patrick, thank you very much. It's a pleasure.
So you have a pretty cool background. You were, moved around the United States. We were talking before we hit play: Ohio, Mississippi, now Nashville, Tennessee. Experience in waste removal, experience in luxury goods, fine Italian
hmm
made goods. I'd love to hear how you got into the waste removal and kind of a bit about your career trajectory before starting VaVia.
Sure. So I became interested in the waste business primarily because I had an interest in construction, and that was from an early age. And I always liked the big heavy equipment and the big trucks, and so I wanted to do something in construction. And was at one point thinking about buying some heavy equipment. And this was in my late 20s and early 30s. I didn't have any money, but I had a friend in Ohio, where I'm originally from, who flipped houses and had rental properties, and he put trailers on job sites that he was working on, and drove it with a dually truck and put a chain on the bottom, and the bulldozer at the landfill would just hook to the chain and pull all the debris out. And so when I moved to Nashville in '99, I started looking at, is this something that I want to get involved in, and did some research about it. Thought I knew a little bit about the business and how to operate the business and what equipment would be needed. And I was really, if ironically, my father was in franchising in restaurants. He owns some Wendy's and Arthur Treacher's Fish and Chips and things. So at an early age, I thought I was going to get in the restaurant business, but I decided, I like to get up early, like a garbage man does, and not work late nights. It just it wasn't for me. I tried it, but at this time, I was working sales in the telecom, and it was doing well. It was working my tail off, and they were giving us stock options like nuts, and I was saving them and just bide my time for whenever I was going to leave and do my own thing. And I was really looking in the Tennessean, which is the Nashville paper, in the classified section, and there was an Atlanta bread company was trying to open in Nashville, and I was looking at that, and then right underneath that, where it said two roll off trucks. That's what they call our trucks. So the dumpsters roll off the back. 1980 and 1984 model, and this was in '99, so they were already old trucks, and 42 dumpsters. And I called, and the wife, answered the phone, and she says, "It's my son's business and my husband's business. The son doesn't want it. If my husband wants to retire, they'll be back at their yard at 5 o'clock. They're the only two employees." And it was Mr. Earl Crick, and I went and met with him, talked to him for about 30 minutes, and said, "I want to buy the business." And he's like, looked at me like I had three heads, and he's like, "But you don't even know how to drive the truck." And I was like, "I'll learn how to do it. You don't know how to work on one." I said, "I'll hire people." And he said, "I want you to go home and think about this for 2 weeks. And then after 2 weeks, if you want to buy the business, I'll sell it to you." And that's how it started. He took me out for a day and a half, taught me how to drive the truck. Didn't even have a passenger seat. It had a milk crate where they put the tarp. And and I couldn't get my CDL. I mean, I took the written test, but this truck wouldn't even pass a pre-trip inspection, and I couldn't rent one because I didn't have a CDL. And so I had to wait like 3 weeks after I launched the business till a friend flew in from California that had a CDL, went and rented a truck for me from her
Hmm.
so I could go take my test. So it could have went down in flames before it ever got going, but uh,
Yeah, run out of cash. It's how
yeah,
most businesses
or had an
close
accident without a
or at an
commercial
accident.
driver's license. Um, but I learned early on just providing excellent customer service and just taking care of the customer, and doing what they say, and and bending over backwards for them, and working hard for them, and doing it with a joyful and grateful spirit at the same time. And um, the business just grew from there, and we ended up getting into recycling because the big boys own the landfills, and they're always messing around with the price and trying to control you. and so I started studying recycling, construction, demolition, debris. Ended up getting into that. I was on a national board, Construction Materials Recycling Association, and a lot of the board members and the guys that were members were in the Northeast. They were in South Florida. They were in California, where disposal costs are so expensive, and it made sense for them. But I went to their location, studied what they were doing, looked into all the equipment. My brother-in-law, who's a partner now in VaVia, lives in California. He came in as a partner, and we bought 28 acres, and we developed a scenic construction, demolition, recycling site.
Hmm.
We told all the big boys we weren't coming to them anymore, and we started processing material. We were running 3 shifts a day, and in about 6 months, we got it down to one 10-hour shift. And we were processing about 500,000 cubic yards of construction demolition debris annually.
Wow.
A lot of
How many
material.
employees did you have at the peak of that business?
Total drivers and everything about 50. But we had rock crushers, wood grinders. We screened out the material. We pulled all the metals out. It was a lot, and we controlled this market. We had about 20 trucks and about over 800 dumpsters, and uh, and then about 2007, Waste Management called and said, we want to buy you.
Yeah.
But I wanted to partner with them. I didn't really want to sell, and I floated a couple ideas back out to them, and they came back and said, no, we want to buy it. And up until that point, I had been thinking about getting a little burned out, wanting to do something different. And I wanted to do something more creative with my hands. And I was thinking about the shoe business, the boot business. Yeah, and so that was pushing me along as well. And there was just a couple factors that were happening in the marketplace that were saying maybe it's a good time to move on from this. And so we ended up doing a deal with them. We closed in '08 before everything closed, and before everything the market and everything went to hell in a handbasket. And we sold it, the whole thing, to them for 200 times what I originally bought it for. Now we had put a lot of money in it and had a lot of debt, but it was a good exit, and we were very blessed and grateful for that. And so my wife and I moved to Italy then at that time, and our daughter, so I could learn how to make shoes and start this brand. And that's when I found out that my grandfather, a man I never met, was actually an Italian shoemaker, and all his family was. So we launched that. Plus, I had a 5-year non compete, 150-mile radius. So I did work for
And
Waste.
you didn't, yeah. And when you came back to the States, you wanted to be in the Nashville area?
Originally, we thought about moving to New York, and thank goodness we did not. We would not be living there now. But no, we thought about it, but and we came pretty close to moving to New York. My wife and I were married there, and it was, early on was a dream that we wanted to be there, but the good Lord knew to keep us out of there. And so we stayed in Nashville and started with Peter Nappi, and it was a good run. Retail is a very tough business, but I mean, we sold in the Barneys in New York. We made custom shoes for Rihanna and Tom Cruise. We sold internationally online, and we were in fashion shows in Paris and Florence and Vegas and New York, and but it wasn't for me. And I had an opportunity in 2017 to do a contract CEO for another company in Nashville, and I was just like, I got to get. And I ended up flipping those assets to Waste Management, and I was like, I got to get back in the waste business, and I just, because I love it, and I feel like it's something I'm given to, and I enjoy the people, I enjoy every aspect of it.
Is it like you're physically doing something, things are changing, like high margin business? What really attracts you? What really brought you
I
back?
think it's
Keeps bringing
I
you
think
back.
it's the people. I like working with the contractors. I like working with our drivers. And I like working with our vendors.
They're more down to earth than the fashion folks?
A little bit, a little bit, but it was yeah, it was great. And I always had the idea about VaVia. Like it wasn't, the name wasn't there yet, but it was always these smaller trucks. The margins are good with them because there's a floor to what you can charge in the marketplace for the dumpsters. The
Yeah.
biggest dumpster we have is 15 yarders, but what you normally see on construction sites is 30. Well, it's not half the price for a 15. So there's a floor to the price. So there's always good margin there. You got lower capital expenditures. You got lower operating costs. You got non-CDL drivers. And because we're not competition, we're not competing with the big boys that own the landfills. They don't view us as competition, and we can usually.
It seems like you're operating in a nice niche where you're probably getting a lot of referrals from people that are just moving,
Mm,
because there's other franchises in the space that seem to do everything for
mm,
like waste removal, moving, and
yeah,
like the full spectrum. And I imagine it's harder to really dominate and like get that referral engine started if you're doing too much.
yeah. We really want to focus on what we do and do it really, really well. And we get suggestions from our franchisees now. It's like, well, what are we going to do here? What are we going to do here? It's like, let's just stay focused. Let's just be the best at what we do, and things will be easier, and our life will be better, and the quality of life will be better as well. So, um, yeah, it's been a great ride, and I got amazing partners, and I love those guys, and we go to battle every day.
And where are you most excited in expanding your business, VaVia?
The,
Is it like a pretty wide open marketplace, or are there a few states and cities that you really want to open up in?
yeah, it's mostly in the southeast and some southwest areas we're interested in. And it was you brought up the FSOs earlier. We were almost went with one, and we were like we want to focus regionally, and they were like, no, we want to take you nationwide immediately. And
For those that are unfamiliar, franchise sales organization. So I guess a few franchise sales organizations presented themselves to you
mhm,
saying that, let's
let's blow this
forget
thing
going
up.
0-16, and
Yeah,
0-16 in 3 years is too slow.
yeah.
Let's go 0-200.
Exactly. Yeah. And we'll get the deals done. You worry about, supporting them. So that's not our
Yeah.
model.
Supplying. Yeah.
We want to take care of our franchisees. We want to make sure that we're not getting over our skis and that we can give them great support. And it's a 10-year, 20-year relationship, and we want to honor the commitment that we've made to them to be here for them. And we're going, and we don't sell them, we reward them too as well, and award them. And but really kind of where we want to be. I mean, we're in Texas now. We're in Tennessee, Alabama. We're in Florida. We are in South Carolina, Georgia, and North Carolina. We want to fill. We're really kind of focusing some of our digital efforts a little bit more on Florida and then in Texas. We're interested in Colorado. Arizona is a spot that we want to be in as well. But I just found out today we just registered in Indiana. Well, we've got a prospect there in Indianapolis, and somebody that's interested in looking at it. So we haven't even, that's the first state we've quote unquote registered for. So
How do you award territories? Like, is it per number of inhabitants,
mm,
mileage radius?
no, it's a population. So we use our mapping tool, and it's 300,000 blocks of population is what they buy, and it's usually probably a 2 to 3 pack. So 2 or 3 territories people are buying.
And who's buying? Like, is this people that are already in the waste removal business, or is it more corporate executives, entrepreneurs?
It's a wide range, man. It's one. My brother-in-law bought one. He quit his corporate job at 27 and a half years and bought Hilton Head
That's a
in
testament. You got to
Savannah.
be careful selling something to your brother-in-law,
I know.
especially that a 10-year commitment.
Yeah, I know. I know. But they're doing well. They bought. We call it Low Country, so it's Hilton Head in Savannah. Uh, and they're.
That that's I love that because people ask, like, every week there's someone reaching out to me on LinkedIn or through our email. It's like,
Mhm,
I want to get into franchising, like, but or they already have a franchise and they have like 0 locations or one.
mhm,
It's like, how do I get the first franchisee? And I'm like, usually it's someone you already know, like a
mhm,
customer
yeah.
or someone you already do business with,
Mhm,
but better yet, a family member.
yeah.
Because if someone close to you is not going to get into this, like, why would you expect a stranger from halfway
Mhm,
across the country to see it
exactly.
and jump in on your
Exactly.
business opportunity?
Yeah, and our first one, we were very fortunate and grateful. The first franchisee was organic lead as well,
Yeah.
and they bought all basically the rights to Alabama. So from Montgomery, Auburn, all the way Birmingham, Tuscaloosa, and Huntsville, really the key markets. And they came on within the first year in 2019. They're doing amazing. I mean, even with a small Birmingham, not that small, but probably 1.2 population, they're killing it. They're knocking it out of the water. Great operators. But back to your question about who are these people? I mean, like this guy, it's it's a Caterpillar executive, former Caterpillar executive, who put the money up. They've got his son, his son-in-law, and then they've got an operating guy who was a partner in a cloud-based accounting firm. He's not an accountant. We joke about that, but He was that, and then we have one waste guy. He was actually in the railroad for 20 years, and then he was at waste management for a couple of years. We've got two brothers that own 51 Sports Clips that bought North Atlanta, Mobile, and Pensacola. Um,
How did they find you?
Actually,
How did a multi-unit franchisee come across this opportunity?
oddly enough, they live in Nashville where we're based, and we did a show here, and they came to the show, and they're great guys. They're funny. They're the two brothers, and then we got a guy in San Antonio. He went to West Point, taught at West Point. We've got an oral executive that financed deal for his friend in Houston. We've got an engineer in Dallas. Um, we've got some money managers in Charlotte that bought Charlotte. Um,
So I imagine like a lot of these people aren't going around driving the trucks. Like,
oh, but they want
is it
to.
a business
Some of them they
they
love it.
want to be?
Yeah, they want to.
Awesome.
They want to get their hands dirty and and do it. They want to figure it
And
out.
they
But
probably some of them haven't done it for years.
no, but exactly. But they're being smart about it, and they're hiring general managers and putting the right people in place. And but they just drive for fun or when they have to. So
And on the like, is this an opportunity that you could work like 20 hours in, 10 hours in, or is this something that you really need to have full time, at least for the first couple of years?
no, if it depends on how it's set up. I mean, if you're putting up the money and you're going to oversee and you're going to hire a GM and you're going to give them some sweat equity, then that can work. And maybe then you put in 20 hours, but maybe not even the first year or so. You need to be a little bit more involved. I mean, it's your business, and um, it's kind of like my cousin in Ohio owns restaurants, and he's like, you have to be here, you have to be present, you got to be there every day. But it can
So
work
ideal
best.
situation, they're rolling up their sleeves 40, 50 hours or more for the first 2 years, but depending on their cash and if they have a good general
Mhm.
manager, give sweat equity, you could potentially be semi-absentee.
Yes, that absolutely.
Okay, cool.
Yep. We want to get you off the ground as quickly as possible and get you cash flow positive. And the best way to do that is have a driver day one. And if you can have a salesperson or a GM that can sell day one, then that's awesome.
So how do you help the new franchisee, one, open up, two, break even fast, and then three, start making real money, whether it's 5K, 10K on a monthly
Mhm.
basis? How do you get the franchisee clearing those steps?
Well, there's a lot of components to it, and there's no silver bullet. My partner, Tim Wells, he's got about 33 years in the waste business. He was at BFI, and then for 20 years, he was area vice president for waste management. So he ran an area of 600 million in revenue, 1,400 employees, and 400 trucks. And so he's got extensive experience in the waste business, and I mean, he answered to CEO of a $15 billion company, but you wouldn't know it if you talked to him. He's the most down to earth guy that you meet. And so he's really, really strong at the metrics. I an accounting degree, so I do all the books. We got to make sure our books are closed by the 10th of every month. But he's the one reviewing everything, crunching the numbers. We have a lot of metrics that we follow and watch. Driver efficiency is very important. Safety is very important. I mean, we make sure of just kind of keep things very simple. We tell our drivers every day. We got posters around the office. Be safe, number one, and then two, take care of the customer. And then once you've got
Yes.
those two settled, then be efficient in your job.
Okay.
But getting them onboarded as quickly as possible. We use a tool that has a template in it. We'll walk them through. We'll do weekly onboarding calls. Getting equipment ordered right now is challenging because chassis are hard to come by. But we have good relationships with Ford and Dodge. We pre-ordered 40 something trucks this year just so we could have an inventory. Otherwise, they're going to be waiting 9 to 12 months to get something in. Um, so that was that's been positive for us to get that piece done. And then there's a lot of pre-sales strategies that we get going, get moving, and we encourage them to get in the marketplace and get into the out in the community and start networking and
Is it like an outbound effort where you like hit up this company executive and you're going after those commercial accounts, or is it more inbound where people see you out, whether through Google Ads, SEO?
we do all of
What's
that.
kind of like
So
the strategy to get the first clients?
I mean, we train them on sales and doing. If you provide great service, getting business is in my opinion, in my experience, is fairly simple. But you got to have provide great service. You got to be dedicated to that piece of it. But we do. I mean, we have SEO, GMB listings with Google AdWords that we do, email marketing, social media. We do all of those pieces as well. We have broker relationships across the country that they use us. They sub out work to us. They don't have any trucks or
Right.
any containers. We have national relationships with remodeling associations, with builder associations, so we're able to tap into there as well. We do events like we put grills, two extra large green eggs into a dumpster. We built it, and Columbia has one. A few other locations have them. We call it the Can Cafe because you call dumpsters cans, for short. And it's great. We go do golf tournaments. We'll go to customers' locations. We'll do charity events. We'll go to the home builders and do their things as well. Tailgates. I mean, all that stuff is really great. So there's a lot of different components that we put together. But the number one thing is training them on the proper sales techniques and getting that repeat business and building those relationships.
I imagine you have the commercial clients that are more repeat, and then you might have like residential one-offs that I'd imagine
Yeah.
are higher margin, but aren't recurring revenue.
Exactly. And that's a metric that we track. Every week, Monday, we send out the prior week's performance of all the franchisees and send it out to all of them. And one of the metrics we track, what's your customer mix? And being
Yes.
80% plus contractor is strong. And right now, Atlanta's leading that. They're early in their growth, but they're leading the whole system in that area.
And how much does it cost for someone to get in? Maybe they don't want to take up like, 4 territories, but just a single territory. What can they expect to invest, including the working capital to get the
Yeah,
franchise off
I
the ground?
the technically in or item 7, the minimum for one territory, which is 300,000 population, is about 120. That's not realistic. I mean, that's you're paying your franchise fee, you're leasing your containers, you're leasing your trucks. I mean, you're getting into the skin of your teeth. Really, if you need to scale this business, and we're not looking for franchisees, we're looking for business operators
Yeah.
that have the capital to scale the business. We in Nashville, we have 10 trucks and 430 dumpsters. I mean, just off the top of my head, that's about a $3 million investment in assets. Birmingham, similar asset base that they have.
So
Columbia.
you come in, you gotta have at least say 150K cash and be willing to lever up through SBA loans or other
Yeah,
means.
we say half a million liquid, a million net worth.
Yeah.
But SBA may do something a little bit differently, and we have financing partners that you can lease the trucks from, and or rent or finance the trucks and containers. But it really we're awarding in between 2 and 3 packs, 2 and 3 territories. So let's just say if for 2 territories you're going to need to scale to about 4 trucks, and you need about 45 dumpsters per truck. So you're 400,000 trucks. You're just call it 150 dumpsters. You're $750,000 in containers to serve. Now you don't need all those day one, obviously, but over the first 12 to 24 months, you're going to need that asset base if you want to get this thing in the black and moving in the right direction, and making some money, good money for yourself. So you're well over a million in investment. Could be bank debt and or cash or combination of the two. And then you've got your franchise fee on 2 units is going to be about 90,000. And then you need some operating capital, to get things going. But we've seen people get in the black pretty quickly.
And how much are franchisees making? And can you share any about the percentages or the numbers of
Yeah,
what franchisees have made in the
let
past?
me. And this is the Nashville location. This is coming straight from our item 19. Nashville in its first year, we're in our fourth year now. We did 960 gross revenue in our first year. Uh, and then the next year, 2020, we did almost 2.2. I'm rounding up. And then last year we did 3.2. And I would say we'll exceed that this year. Um,
That's great.
One of the things that we look at too, we call it net revenue in the industry, but it's your gross revenue minus your disposal costs. And that's one of the things that's your biggest expense. And that's one of the things that we help you control through relationships we have. Plus, if you did this on your own and you were in Austin, Texas, someplace we want to be, and you went to the landfill and said, "Hey, I'm starting a dumpster company. What kind of rate can I get?" They're going to point to the sign on the wall and say it's the gate rate. You're
Yeah.
going to pay the gate rate. But we are able to go in. We can speak the language to them. We can also tell them, hey, this is what we have been able to do in these other markets. We've been able to scale our business. Nashville's doing 25,000 tons a year already. So we can speak to that. And
Yeah, you can 3x the amount
yeah,
of business you're gonna do with them over a
exactly. And
3-year
and so
period.
they're more prone to give us good price. And
Yeah.
plus, Tim, my partner, has been in the corporate side for 30 something years. His dad was in the business. He has relationships all over the country, so that doesn't hurt us any. Um, but the Nashville location, the median for last year, operating margin before VaVia fees, was 33%. Um,
Solid.
yeah, that's pretty solid. But everybody says, "Oh, that's your location. You guys know what you're doing." Okay, well then we got three outlets here. One outlet number one did 35% operating margin before VaVia fees. Outlet two did 36%, and outlet three did 30%. So
So,
pretty.
after 30%, like, so that profit, what other expenses might the owner have, before they take the money to pay down debts or just put in their wallet?
After the operating margin before VaVia fees, they're going to pay their royalty to us, obviously. Um, Really, it's more non-cash expenses. I mean, there's it's EBITDA is what we're looking at that point. It's depreciation, interest, taxes, and amortization. So obviously, you get a lot of depreciation in this business because it's a heavy asset business.
Exactly.
But there's great tax advantages where you can accelerate that depreciation if you choose to. Consult your CPA on that. I mean, we we look at it every year, but we tend to defer that and use it in later years. But that's a decision everybody's got to make based on their personal.
Yeah, and I imagine, like, some of your franchisees enter in thinking they're gonna, grow the business and they're gonna be in it for 15, 20 years, and other ones might wanna have a liquidity event
Hmm.
after 5, 10 years.
Yeah,
So, depending on that, they might, with their
exactly,
CPA, decide on a certain tax strategy.
exactly.
Well, any other key data? I know you mentioned some of the key metrics, but any other data that you're personally tracking or your franchisees should be tracking daily, if not weekly?
Sure. And I'll refer to that document that we send out every week. So what we send this out to them. It's kind of our scoreboard that we send, and we track all the deliveries, the hauls, the forecasted hauls for that month, the forecasted revenue. Your gross revenue per haul is something that we're always we're keeping a close eye on that. The net revenue per haul, which is like we said just a minute ago, is your gross revenue minus your disposal, and how many containers you have on job sites. And I can tell you, as of last week, we have a total of 1,559 containers, and across our whole system, and we've got 91% of them are out.
Wow,
That's
that's an amazing efficiency.
Yeah, that's pretty strong. We also track what percentage. I think I mentioned this earlier. What percentage? What's your customer mix made up of between contractors, brokers, and then residential? Um, and if you can stay in that 80% range for contractor mix, it's this repeat business. You're building relationships. It's very strong. That's a good that we keep an eye on that. The other thing is that we focus a lot on is asset utilization. Um, price of steel in the past 18 months has almost doubled. Um, so making you're getting good use out of the assets that you have, and so our metric that we try to achieve is 2.5 turns or 2.5 hauls per month per container. Um,
Hmm.
so working to make sure that you can get those dumpsters turned over, and get them back in your inventory so you can get them back out on another job site.
Philip, any concluding thoughts for those that might want to get into franchising, or further explore the VaVia brand?
I think if you're looking to get into franchising, obviously there's a lot of broker networks out there. Just choose them wisely. Get um, and there's some good ones out there. There's some bad ones out there, but there are some good ones out there. And I think IFPG seems to they're a nonprofit, they're an association. They're good people there. But yeah, just walk lightly and know who you're dealing with, and try to get and do something that you're passionate about. You got to line it up really with what you want to do. Do you enjoy being outside? Do you want, or do you want to sit at a desk? Do you want to work full time or part time? And just, but that's, and only you can answer those questions. So being self reflective in that area and figuring that piece out is the first thing that you need to do.
That's great advice. So one is like really figure out what you're passionate about, what you want to be doing,
Mm-hmm.
and then two, have the right franchise advisor. Or
Mm-hmm.
if you do choose to work with a franchise consultant or broker, choose wisely. Probably good to ask for some referrals, see
Mm-hmm.
prior franchisees that they play, see how they're
Yeah.
happy. On the franchise fee side, there's a lot of franchisors that we have data on at Vetted Biz that they've been in operations 5, 10, 20 years, and they're still making the majority of their revenue from the franchise fees collected.
Mm-hmm.
With based on the numbers that Phillip has shared today and how his franchisees are growing, if not, you're already collecting a lot more in royalties. I'm sure it's just a matter of a couple of years before the royalty stream of VaVia is big. VaVia is bigger than the franchise fees collected, and that's a win-win where everyone's aligned and
Absolutely.
everyone wants to
Yeah.
increase the sales and the size of the business.
Absolutely. Yeah, absolutely. I mean, franchise fees are essential just to continue with the training and the growing of the business and putting the right things in place. But really, you want to keep those as manageable as possible for people, and then so they can have more money to invest in the assets and they can grow their business and they can make more money for themselves.
Well said, Phillip.
Mhm.
Well, it was a pleasure having you on.
Thank
We'll
you.
be sure to leave links to your website as well as your contact
Hmm.
information. And thanks again.
Thank
Appreciate
you.
everyone that
Thanks,
joined.
Patrick, for having me.